Hello everyone, this is Dare here. Hope you're well. Today we want to talk about how to develop your trading bias. So in today's lesson, we will look at what is a trading bias, why do you need a trading bias, and how to develop your trading bias. Okay? You might be thinking, what is a trading bias? Okay, take a trader for example. This trader wants to make a decision on the chart is looking at. Let's say it is Euro USD. He wants to make a decision of whether to buy, to sell, or to stand aside. So this is what we are calling a bias, a probability of a certain outcome. Okay, so you need to analyze the market and decide which side of the market you want to go. You want to be on the uptrend side, that is buying or long, or you want to be on the downtrend, shorting the market or selling, or you just want to stay aside because it is not clear yet. This is what is called the trading bias. And how do you do those trading bias? How do you make those decisions? You can use technical or fundamental analysis to do that. I will show you some of those things that you are going to use in this lesson. Okay, first of all, why do you need it? Okay, you need it because you have to trade. You want to trade and you need a direction. So to make up that decision of which direction you want to go to, that is why you need to be biased on one direction. Okay, you can be biased on buying today, tomorrow on the same market. You could be biased on selling, depending on what the market is telling you, what you can see on the chart. Okay, so let's answer two questions now. What market do you trade? What direction do you trade? Okay, the first question is what market? What market will depend on your trading style, how much you have available, which is your financial resources, where are you located, and what time have you got available, some people trade forex market. The reason why some people trade forex market, because of the low entry barrier. Okay, so that means you can come into forex market with $20, $50, $100 or even less than that. That's fine, but some market is not that easy with such a low capital. Take for example, some people will trade a futures market, buy one single contract maybe for 20,000 US dollar, and that contract could be end of the contract could be 6 months, it could be 2 years. Well, not many people could either be able to afford that, or secondly, even be able to wait for that long for them to know the result of their trade. So the market will depend on you. Which one do you choose? Most of you already choose a market. Fantastic. So I just want you to understand that there are different markets that you can choose from. Now, the second question is what direction? This is a question I get a lot. Okay, if you pay attention here, you will understand exactly what direction you need to trade at any specific time. So let's say you are looking at your chart right now. Okay, let's say you are looking at a daily chart or even an hour chart, whatever time frame is relevant. Okay, you want to determine two things. First of all, look at this picture here. I say we are in an uptrend. Why? Because we are making a series of higher highs and higher lows. Look at these three highs. This is higher than that, and this is higher than this. So it keep on rising. Even the lows, this low is higher than this low, and this low is higher than this low. It means even the low points also are rising. So when you have a series of higher highs and higher lows, you say you are in an uptrend direction. And when you are in an uptrend direction, what is your bias that time? Go long. That's it. But unfortunately, anything that goes up will always come down. Market hasn't got one direction. And that happened right here. Right here, you see we broke the lower, the higher lows. You can see here, it used to be higher, and suddenly it's no longer higher. It's now getting lower than the previous low. At that point, the uptrend is over. It is over. So when uptrend is over, we go either into a downtrend or we go into a range band market. So let's look at a chart example to illustrate this for us. This is a very good example to illustrate this picture. So look at the higher highs. 1, 2, 3, 4, 5. 5 higher than 4, 4 higher than 3, 3 higher than 2, 2 higher than 1. So this is higher highs. What about the lows? See? 1, 2, 3, 4, 5. 5 lower than 4, 4 lower than 3, 3 lower than 2, 2 lower than 1. So you have a series of higher highs and series of higher lows. This is an uptrend. And as we said, look at end of trend, because this high here, the 5th is the highest, and this will be number 6 low point, and it's broken. And once that happens, bang, end of the trend. So we either go into downtrend from here, or maybe we have gone into a range band market. We need to decide that in the future using the same criteria. Okay, let's look at the sell direction. So what bias are you going to be on this one now? This is long. You'll be buying into these opportunities. You'll be looking for opportunities to buy. Let's look at the second direction, which is the downtrend. For downtrend, when you have a series of lower highs and lower lows. So series of lower lows and lower highs, that is a downtrend. You can see this low, lower than that. This one is lower than this. The same thing, this high is lower than that high. So when you have this combination of lower lows and lower high, you say you are in a downtrend, and at the same time it will come to an end at some point. And when you begin to print new highs, you don't want to see a new high in a downtrend, but the time you start to print a new high, unfortunately, game over for this downtrend. And now we are switching either to an uptrend or into a range band market. So let me show you an example of this in a chart. Okay, this is an example. Look at the highs: 1, 2, 3, and 4. These are all highs of the market, but they were lower high. 4 lower than 3, 3 lower than 2, 2 lower than 1. What about the lows on this chart? 1, 2, 3, they are all lows, but 3 is lower than 2, 2 is lower than 1. So when you have a series of lower highs and lower lows, you say you are in a downtrend. And as we said earlier, it will come to an end, and bang, this is when it comes to an end, when we start to see a new high. We don't want to see a new high in a downtrend. So when you see this scenario, what bias should you be on? You should be on shorting this market. You should be biased to downtrend. Okay, now let's look at a basic tool we can use to decide which direction we want to trade, or what bias should we choose. One, we can use a technical indicator. We all know it's called moving average. Let's use a 200-day moving average, simple moving average, 200 period simple moving average. So when you see a price below it and it's far away from it, you say it's in a downtrend, and from there you'll be looking for opportunity to go short. So your bias at this point is shorting the market. You are biased to going short. Let's look at the other way. The other one is when the price is above this 200 moving average, you'll be looking for opportunity to buy, because your bias is to go long. You could use anything like stochastic to be picking up all these oversold regions. Oversold region, I'm buying there. Oversold regions, buy, buy. You use some other indicator. You have a bias. You know what you want to do. It's just waiting for the opportunity and waiting for the setup to take place. And the last thing we're going to use to determine our bias is called the price action. Okay, so price action, you look in your chart and you see swing lows and swing highs, they are all rising. So this is what we call a swing high. See, market came here, that's a swing high, swing low, swing high, swing low, swing high, swing low. So when you see swing high rising and swing low all rising, that is an uptrend market, and you should be looking for a buy opportunity. Your buyer should be going long. Let's look at the opposite. When you see swing lows and swing highs, they are all declining. They are all falling. See, This is swing high, as we said before, swing high, swing low, high, low, high, low. You see they're all falling. It shows you that we are in a downtrend market and you should be biased to selling. You should be shorting this market. Okay, I hope you guys enjoy this video, this lesson. If you enjoy this lesson, how to develop your bias, how to decide which side of the market you are going to be. As I said, you could be buying it, you could be selling it, or you could be staying aside. It's also a position to take. So guys, if you like it, please give us a thumbs up and do not forget to subscribe to this video and like us as well and click the notification bell. It's next time to talk to you again. It's Dari.